evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This is our 555th video, baby. 555 and more coming at you. Traders, this video is being filmed on Tuesday night for trading Wednesday, March 3rd, 2010. And we have 3 topics on the board, and we're going to get to them right now. Topic number 1. There is a double top in the Russell 2000, one of our leaders. As you know, the Dow Jones Transportation Average, leader number 1 of the U.S. indices. Then we have Nasdaq, number 2, and just below that is the Russell 2000. Right now, Russell 2000 has a double top. And what do we know what the rule is? The rule is this, and I'm sure my Omniacs are already saying it while they're watching this video, but when you see a double top, sell a double top, right? That is our rule. Well, there's a double top in the Russell 2000, and I'm afraid that I have to sell it because we were bullish the last couple of days. But you know what? When you see a double top, sell a double top. So, double top in the Russell. Reason number 1 why there's a red Omni on the board this evening. Bearish indicators on the leader, the Dow Jones Transportation Average. That's now 2 of our leaders. Transportation Average has bearish technical indicators and had a turnaround day today. So it looks like for Wednesday, the Dow Transports is going to start to lead us down. The Russell agrees with that. And there is a head test of a head and shoulders formation in the Nasdaq. And I'm going to explain what that is to you right now, traders. Normally, we see what's considered a head and shoulders formation. What's very simple about it is you see a chart building. And if you stood back and looked at that chart, it's almost a silhouette of a person's shoulder, their head, and then another shoulder, right? Sort of like that. I mean, not perfect, but sort of like that. What happens many times with head and shoulders formations is this. You get what's called a head test, traders, and this is what I mean. After the head and shoulders is formed, the market runs up and tests about the middle to the top of the head. If it fails here, a breakdown ensues. That is what's called a head test of the head and shoulders. And Nasdaq, our 3rd leader of the 3, has a head test taking place right now of a big head and shoulders. So we have double top in Russell. We have bearish indicators in the Dow Jones Transportation Average, the big leader. And we have a head test of a big head and shoulders, which in itself is a bearish formation if it works out in the Nasdaq. So our 3 leaders are giving us signals that we might start to break down a little bit for Wednesday. We have a red Omni on the board. Traders, I have some charts I want to show you to illustrate that. What I want to tell you about before that is in the last video that we did for you, we showed you the head and shoulders in Nasdaq, and we also showed you a bull flag and said, don't worry about that head and shoulders for now. We're going to pop out of the bull flag. Once it gets out of the bull flag, then we'll see what's going to happen. Well, the bull flag worked, and I'll show you the chart. It popped right out as of Sunday evening and Monday and Tuesday. Nasdaq popped right out of the bull flag, but is now running up for the head test. Very interesting, traders. The 3 leaders are going after all these bullish days. I think I'm tired. I hope that's not the case, but there's no other way to trade, but technically, in my opinion, to catch this right more often than not. So, traders, I have a case to prove to you. And with no further ado, let's go look at some charts. Okay, traders, the first chart I'm showing you is one of our leaders, the 3rd leader, actually, in consecutive order. And again, I'll say them to you. Dow Jones Transportation Average, leader number 1. Nasdaq, leader number 2. Following up the rear usually is the Russell. The Russell 2000 is the chart you're looking at now. This is a daily bar, and that, my friends, is a double top. And the rule is, when you see a double top, sell a double top. Double top here. Listen, it's been bullish. We talked about the bull flag. It broke out of the bull flag. Scares me to have to do this, but we follow our trading rules. I am selling this double top. Stops aren't so big here, so there's not all that much to worry about. But when you see a double top, you got to sell it. But the case is this. One of our leaders pointing towards the downside because of that rule right there. See a double top, sell a double top, right? So there is your Russell. There is a big reason why we had to look for some downside, or at least do our analysis wondering if there was downside coming. So then, of course, I went to the transportation average and I went to every other index and realized, okay, you better follow the leaders because that's the way to do this. So What are the leaders? Double top. When you see a double top, sell a double top, that's your Russell. Let's look at the next chart. Okay, traders, now we are looking at the Dow Jones Transportation Average, our leader of the U.S. indices, the big leader. This is a daily bar, but of course it's not a bar chart. It's two indicators, and I can show you 5 or 7 right now that are pointing towards the downside. But the top one is the RSI, or Relative Strength Index, pointing down, as you can see, right? It turned from being up to down, and it also got a little bit overbought here, as it usually does. It turns at this level. We're at that level now. So that's interesting, right? Then you look at slow stochastics. Percent K and percent D crossed not once, but twice, and is now pointing down. And once again has gotten even higher than its usual overbought area, and it's starting to look bearish. So it's in the overbought area, and yes, of course, if it's a bull market, it can stay up here for weeks. But it seems to oscillate a lot lately, and with other indicators beginning to point towards the downside and the double top in the Russell, I'm going to go with the leaders indicators and expect that we're going to start to head down. So you've seen the Russell and you've seen the Dow Jones Transportation Averages indicators, two of our leaders. Let's go look at the next leader here, the Nasdaq. Okay, traders, what we're looking at now is one of our leaders, the secondary leader, the Nasdaq daily bar chart. And you can see some things going on in this chart which are very interesting. One, head and shoulders formation, right? You got the shoulder, the head, the shoulder, and it's clearly there. 2, we are above OTAPMA, or the Omni Trading Academy's proprietary moving average. 3, I showed you this bull flag on Sunday evening and said, don't worry about the head and shoulders yet. That's a bull flag. That's a day trader's pattern. Go with the bull flag. And 4, there is a head test taking place in the Nasdaq, and this is it. The Nasdaq is right up to here as we speak. If it gets into this area at all and fails, the ensuing result should be a big down move. Now, I showed you that on the whiteboard a few moments ago, but what does that mean? Me showing you what might happen and me showing you here what might happen. How could we tell what does happen with head and shoulders? Well, there's an easy way to do that. We have seen these formations and head tests in other markets, and we stayed on top of them while they were happening and told our Omniacs at the Trading Academy, watch out, head test coming. And it actually did happen and failed in 2 markets. The only 2 I seen it in. This is the 3rd market I'm seeing it in and expecting another failure. So when it gets up to test the middle to the top of the head, I expect a failure and a breakdown. Now, if it's a good bull market, there'll be no failure and it'll just go, go, go. Right? We'd love to see that. But the first thing you look for as an analyst is the head test and the failure. Now let me show you a couple of examples which should absolutely make you believe in this formation and the head test and the break that happens afterwards. Okay, traders, we are now looking at the 30-year T-bonds, the March contract, and this is a daily bar chart. As insane as this might look to you, it's actually quite simple to understand. Shoulder, head, shoulder. Let's say none of this exists yet, right? Shoulder, head, shoulder. What happens next? Well, you expect a head test. And what did the market do? It went up, 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 failed at the head, and broke down miserably, traders. Look at the breakdown. Big. Failed right at the head, as we expected it to do. Lots of times they'll fail in the middle and the bottom. Sometimes they make it all the way to the top, but you get failure in the head and then the breakdown. So the market makes its head and shoulders, runs up, makes a failed head test, and breaks down. But what does it do while it's doing that? Shoulder, head, shoulder. Another shoulder, head, shoulder. Second head and shoulders. Now an inverted shoulder, head, shoulder. Opposite of the upright, but the same formation. This usually means a big market top is taking place. And I think a big market top is taking place in bonds. But that is for another video. This video is about shoulder, head, shoulder, and the head test that should fail. So you can see before your eyes, as clear as can be, shoulder, head, shoulder, run up, failure, big break. That's bonds. Let's look at another one. Okay, traders, now we're looking at the sugar contract. This is the March daily bar. This was back from August to October of last year. While this was happening, I drew it up for my Omniacs. I did classes about it. I drew the head test. And what happened? We did shoulder, head, shoulder. Look at this. Rally, rally, head test, failure, break, 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 break. Big breakdown. This looks small, traders, but we're talking about almost 400 points in sugar. So you had your head and shoulders, you had your failed head test, and a breakdown afterwards. That is what we expect in the Nasdaq and the S&P because you've seen it in bonds, and I just showed it to you in sugar. And almost every time I see a head and shoulders traders, you know what we get out of it? It's either the head test and the failure, or it breaks right out of the head and shoulders and just goes without ever doing the head test. When I see it building up here at the top of the shoulder, or up here at the top of the shoulder, I expect a head test. If it doesn't build at the top of the shoulder, then just expect it to break down. However, we are day traders, and we take these trades one day at a time. So we have our stops in, just in case it goes through the head and just continues on. But traders, that is how you handle a head and shoulders when you see one. You don't know if it's a top. You got to wait for the head test. If it fails at the head test, you know it's a short-term top, if not a long-term top. Do your homework, traders. Pull your head and shoulders. Look at how many times you can find one where the market did a failed head test and broke lower. And that is what I just showed you here. Traders, that is what we're doing in the Nasdaq at the moment. The S&P is on its way there too. Let's see what's going to happen. I'm a believer in our markets, and I think our markets eventually, if not this year, will be much higher. But not until we get above that head and shoulders I just showed you. There is no way I can be very bullish yet. Again, pull your own charts, do your own homework, take a look at this scenario for yourselves and see if you can find it. If not, make sure you come on down to my site. I'll be more than happy to help you find these formations. So, traders, you see those charts? Did you see those head and shoulders, those failed head tests and the breaks that happen afterwards? That's what Nasdaq's going for right now, traders. So until we get above that head and shoulders, and there's a big if there, on my board, it's going to say, don't fall in love with the upside, traders. Upside must go back on this board for now. I hope I can erase this and say, don't fall in love with the downside. But until we get above that head and settle and move higher of the head and shoulders, you gotta not fall in love with the upside of this market. Again, I'll repeat, I believe in this market. I think it's a good market. But technical analysis rules the day. It's what we follow to come up with our trades. And the technical analysis says, you better watch out for that head test, Oscar, and you better tell your omniacs. So that's what this video is about. Traders, again, pull your homework, take a look at those charts. Come see me at the site. It's www.livewithoscar.com. If you cannot find that formation, send me your charts. Jump into the chat room, and I will help you find it if it exists on the chart of your flavor. All right, traders, getting closer to Omni Camp. I'm getting psyched, but let's hold that back for a few days. We got a lot of work to do out here. I want to run back out there and see the markets. Make sure you give me a call anytime day or night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.